Welcome to Insights with Thomas Caldwell on Thursday, July the 3rd, 2025. Okay, Tom, it appears Prime Minister Carney is trying to clear the decks to get approval for some big projects in Canada, such as the pipelines and the Ring of Fire. With the adoption of Bill C-5, very hard to say, what does this indicate for future growth in Canada?
Well, I think you have to separate big projects from future growth. Kudos to Prime Minister Carney with this C-5. You can't be pandering to the perennial victim class year in and year out. We're not getting things done. The obstructionism on the Trans Mountain Pipeline, originally an $8 billion project, ended up at 30 some odd billion because of delays. C-5 is something we have to do in this country. We can't have hyphenated Canadians or people saying, oh, you can't do this, not in my territory, etc. If things are important to the country, they've got to be done. So good for him. Politicians have to take risks if you want to be leaders. I think growth is a different matter. It's one thing to have these big projects. They look good. They support our dollar. Those are positive things. But if you want to get economic growth, we've got to address taxes. We've got to address regulations. We've got to address Quebec being a separate country. We have to bring us all together. And right now, our policies are such that we're not getting the real broad-based growth, jobs for young people. The unemployment youth is 20-25%, and that's probably a low number. We have to go broader based than these big show projects, because you know politicians love to cut ribbons and smile and wave and take responsibility. So I think it has to be broader based.
Okay, so I want to move on to the markets. The markets they've had a lot of good moves this year, despite the mercurial behavior of President Trump and extreme events around the world. So what are your comments?
Well, first off, markets have been strong. Let me refer to the U.S. market, have been strong because it still is a destination for your funds if you want to protect your purchasing power. Inflation is a permanent fact of life. So you having the strength underneath there. You had the Magnificent Seven still showing results. We've had a really good run in the U.S. market. It's kind of sloshing around a little bit now, waiting for good news, bad news, for opportunities within individuals. So I think the market there is starting to take a breath, just slowing for a bit. That doesn't mean to say that it's going to stay that way, but I think we're going to have a period of time where we have to digest all the things that are going on. Canadian stock market, remember, it's heavily weighted by resources and Canadian banks. Resources have done well, banks have done well. It does not reflect the broad-based economy, but it's been quite strong as well. We're in negotiations with Mr. Trump, depending on how those turn out, and they're not off to a good start because we seem to be doing dopey things with that tax on technology companies and saying we're going to support the supply management. That's already enraged them. But I think we're going to come up with something positive, better than what has been publicized out of it. I don't know that that will affect the market per se, because the manufacturing base of the Canadian economy and the index in the stocks is not that large. So the index has already had its move. There might be a bit more move, but I'm looking for something positive out of it. But we haven't got off to a good start. But I'm an optimist, as you know.
Thank you for your optimism.
You got to work at it.
And thank you all for watching. Bye for now.